This is London with Bitcoin Spike and VIP Trader. We're going to dig into the details for the New York close. It was a great day, as I've been saying the last number of weeks. Don't pay attention to the FUD in terms of the rebound. We're going to talk about for Bitcoin, a little bit of a rebound in play. For NVDA, nice way to crawl back up and over that level of resistance to support hit. Yes, we have a recovery on NVIDIA, on Bitcoin, and on Tesla. Nice move on Tesla, reinforcing the specific lines we were looking at. Remember, it was bullish over, bearish under, and yes, we got where we needed to get. Congratulations, everybody who is trading. We're going to dig into the details. Want to shout out to everybody in the back, our #1 trade group. This is London, former hedge fund owner, private, non-SEC, not financial advice. We're going to take a look at equities. We're going to bring in from equities. If you choose to trade them or otherwise, that's your deal, guys. We're going to trade ourselves. We want you to trade. You let us know how your trades work out. We'll let you know how our trades work out. We focus on max probability trades. That's it. Max probability trades, not greater than 50%, not 55%. We want 75, 85. If we can get up to 90% and make all this look easy, that's what we're after in the market. Let's take a look at the specifics on really the way that I had framed into personally. And actually, before we get there, I shared that with VIP in terms of this specific move back to the upside for Tesla. Looking at the dynamics, this diamond, we have a diagonal diamond. I would recommend that you take a look at what a diagonal diamond is. What are the breakout potentials for a diagonal diamond? We need to break out over the resistance. This is the hourly chart. Take a look at it. Pay attention to it. Big time, guys, big time. In terms of Bitcoin, we had a flat top resistance, descending line of support. We caught this move in the back. Congratulations. Nice move to catch in the back. What's going on? From the low level of support entry to the max there, we're looking at a 1.26% on your leverage. That's over a 200% move. I know, go somewhere else and complain about leverage. We love it. When things slow down, it speeds up the price action. It's required, period. If you can handle it, if you can handle your trades, you can handle leverage. I want to shout out and say hello to Venus. Thank you for being here. Venus, nice. I think you're on the road. Hopefully everything on your trip is going well. VIP trip, what's going on? Let's take a look at Tesla. Let's take a look at the framework that we were encountering today. Just a nice rebound, we have to admit. Nice gap fill. Most certainly, we were on the specific level here of this capital line reinforcing, and to the upside, we filled the gap, which is that space between the specific drop we got on open. Just look at that nice fulfillment on Tesla. And I've been saying the last several weeks, just so that you know, don't take it out of context at all, but don't pay attention to the Armageddon news. That's in the context of the markets. The bears coming in and saying we're headed for a Great Depression. Guys, that's not necessarily a comment reflective, just to clarify, in terms of any war news. I am certified strategic military intelligence from guys at the master's level, not formally affiliated with any department, agency, bureau, nor military division, domestic nor abroad, just so that we know. But the Armageddon news is, well, the gauntlet is falling, right? Be prepared. Everything's going down. Sell that somewhere else, guys. Sell it somewhere else. Bulls get paid. And when the patterns are there, when we have an opportunity to schedule in like we did on Tesla today and just knock it out of the park, it's a nice move. Nice move. What reinforced on the hourly? It was nice to see this in terms of a reinforcement of that bottom side Bollinger Band. Let's take a note of such. And that bottom side pro line on Tesla. Boom. Nice feature. Nice feature. Once again, we're always looking for the specific, what we would say, the expanding volatility. That expanding volatility is a really key concern. You guys understand when you watch this channel, when you're plugged into us frequently, we want something that looks like this. I want to tell you, we want something that looks like this. I want to trade something in line with a descending line of resistance, a descending there with line of actual support, let's say first, and then the resistance across the top. What I want is them diverging or expanding and both descending. The level of resistance, level of support. I want this descending. You're going to say, yeah, but we have an inverse head and shoulder. Got it. Rocket. Why did we overproduce so far to the upside? Ask yourself, how did this overproduce so far to the upside? Because our target, man, looking at our target from this breakout on the inverse head and shoulders is why I drew the bell pattern formation. I mean, golly, look at our pattern was right here. We rocked it, boom, to the upside. So I bring that expanding volatility into play. And Venus saying, good evening, VIP. Good evening, Venus. Hope you're doing well. Now, what do we have to lay over this pattern? We get to talk about this, a 5-minute pattern on, what do we got? T-minus 5 minutes in terms of a closeout. We'll talk about the probable open. Is there a probable open for tomorrow? Is there a specific, just say, guys, is there a cautionary kind of breakout we'll be looking for tomorrow? Where are we at in terms of any of the probabilities that may just say, we got to be in this trade overnight. We got to let this thing rock in the morning. Remind yourselves, this morning, what did we get? Right on open, we got to drop straight into a line of our pre-designated pickup, a fire sale line. Bam, and within the first 2 minutes, within the first 30 seconds, really, we were in the money. Within the first 2 minutes, boom, it paid over and out, nicely done. Then you got a chance to look at your patterns, let things unwind. It was a nice day in the market. Now, the key consideration as we were to look at the expanding volatility here is this will invite us, absolutely, on Tesla to want to participate at a potential lower level, ideally within said volatility. So we're seeing this coil in terms of the pickup here, level of resistance, support, and a triangulation within that expanding volatility. The pickup back to where we were at gives us the dynamic in play, which everyone is paying attention to, and we'll take a look at some over or under key critical thresholds in terms of a moving average or two, guys, here in just a moment. This specific pattern is in play. All right, in terms of the cupature and handle, we need a breakout. You know this. Let's go to I would really like to see like the hourly has a near flat top resistance as well, but we are also just along this line. My chart this morning, when I went to go hit the iron, looked like this. Now, we had this specific pattern framework. You guys know what this is, just the expanding volatility. We trade assets that are volatile. That's it. You know this. We look for the volatility. Within that volatility, we look for pattern expressions that are going to provide us the optimal operation, guys, in the tactics within said pattern framework so that we can capitalize on the volatility. So number one, we're on the hunt for volatility, period. Number two, we're on the hunt for patterns within the volatility. It's not all going to be bull flags. It's not all going to be ascending triangles. It's not all going to be your classic descending, ascending wedges, guys. It's going to be volatility. The handoff between the bulls and the bears, and the bulls and the bears pushing, 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 pushing. That is volatility. So when we see this, we're prepared to operate back up along the level of resistance for a potential additional handoff by the bears. And we are prepared at lower value entries along this handoff equation in terms of that volatility expression. Is the whole reason we're in the market is expanding volatility, is the volatility. So looking at that level of support, we were ready here and below at lower levels on Tesla, but what picked it up? It was the story of this morning. You guys knew this in terms of what we covered. It was all about the preceding lateral pickups to the left, without a doubt. It just was. That was the type of day. So that's been ingrained in terms of those lateral pickups. And just understand we have lateral pickups below. Without a doubt, we do. This is a very well completed Elliott wave channel. You understand, if you do Elliott wave, this is a very well completed channel. Okay, in terms of a 1, 2, 3, 4, 5, unless this is considered to be a constructive element of the cupature and handle, and unless we break this level, guys, this is at a maximum. Bottom line, it's a 1, 2, 3, 4, 5. That's a maximum in terms of Elliott. With that said, we're looking at a breakout of 261.71 required. Candle set up and over, required. This would be a beautiful, beautiful open tomorrow to challenge the traders to guys, to laser into a potential trade. Remember, on breakout, we're looking for what? Orders below along that top shelf prior resistance. Every day we see that nearly on every breakout. So that's going to be the way that we're going to leave the specifics for Tesla, without a doubt. Take a look at any potential crossovers. We will note that we do have a crossover on the hourly up and over the specific 20 moving average, which did hit again, reinforced lower band support. We're riding our top pro line on fire and ice. Hello, nice trades. Technically, we have an upside target at that top side band, okay? Given the inconsistency a bit here and there of the hourly time frame on Tesla, the traders are kind of getting a little anxious and feeling like they're being underappreciated on that hourly time frame. Note such, okay? Note such. And you get a sense of when the traders are looking at a time frame like, come on, man, you gotta stay true to a tactic. You gotta stay true to kind of where we're at. On NVIDIA, very quickly, let's just assess very quickly. We're about to come into the close here, re-hit along we're actually on the 6 hour here, cap line. Pay attention to that 6 hour. It is in play, and looking at the specific 4 hourly cap line, we saw a pickup today on NVIDIA as well. Let's see, we got about another minute left. It's coming to a close. Anything highly relevant here? We're just looking for a potential retouch on the specific hourly. And what are we looking at overall? An additional breakout up and over, and what's the level required? What is the level required here at 458.69? So tomorrow, be on the lookout for a breakout on open. Be on the lookout. Make sure you're prepared to operate on a breakout, as we have multiple patterns in play. Not as exciting in terms of this clear scoped in. It looks like New York is closed, but not as exciting in terms of a bit of a rising wedge here on NVIDIA. We like those to be just left in the dust, but we are excited about the specific dynamics on NVIDIA in terms of the way that she's performed has been very, very nice. And it looks like Bitcoin potentially is shooting me a bit of a, let me see what Bitcoin's doing real quickly. Let's see what she's got. We got, I'm talking over my alert. We have calls through, Call Pro. You guys take a look at that in terms of phone calls for your alerts. I highly recommend that you look in to those specific alert functions so you get a phone call. The stream was talking over my alert unfortunately, but we've got too many phones around here, so that's an okay problem to have. Level of resistance across the top. What is the story here on Bitcoin? After the breakout up and over on the flat top resistance descending line of support. And guys, congratulations on NVIDIA and on Tesla. It wasn't an easy day to just say, hey, well, I'm gonna go ahead and schedule into the market, huh? Yeah, down, it was, guys, well, we were down. But let's look at the NASDAQ real quickly while we can, while we're having this discussion. Before I get into the details on Bitcoin, I just wanna say, hey, good job, because it was very clearly a day where people could have just surrendered their positions and just been looking straight down. You know this, huh? Some bad news, geopolitical, some world events, conflict, and really Mother Nature not playing nicely in some other areas of the world. You just have to say, like, some reason with potential spikes in oil, with some additional, geopolitical concerns, and otherwise, there's some reasons we could have just been looking straight down. Stay tough. Look at your technicals. Identify your patterns. Okay, trade your within the guys framework that you have, and don't just surrender. Great day for market makers to clean up on people who become what would you say? As I'm thinking of the word capriciously, or say they become I don't know, guys. They just become a little bit short-sighted in terms of, or over anxious, or just over emotional in terms of the market. So we're excited, and I'm excited for you guys that you held tough, relatively tough today. NVIDIA down about 1% on the day, and really Tesla with a nice rebound. Bottom line, this is the NASDAQ. Taking a look at the NASDAQ, we really had a nice recovery. NASDAQ finished in positive territory. Hello, guys. Nice move for the NASDAQ today. And again, it could have just been nothing but the bears, guys, in the market, but it was just nice to see the resiliency today. It was something that I definitely just had a good feeling that we would be a little bit more resilient than potentially people feared. We've been having so much fear recently in the markets imputed to us in terms of overbought, bubble talk, this and that. It's like the tech sector is doing well. AI really is something. So it's nice to see the tech sector particularly continue to do well. Let's go back to NVIDIA, Tesla, and we were at Bitcoin here. Taking a look at Bitcoin, remind yourselves of one thing, the dividing line in the sand, and you'll see here, this is on the 77-minute, guys, one of my favorite time frames. If you don't have the 77-minute on your specific time frame setup, make sure you add the 77-minute to your favorite, so you'll have it up along the top on TradingView. 77-minute, you'll see a pickup at the preceding pivot here. Very nice. Not necessarily quite as clean on the hourly, for instance. You'll see some dynamics in play on the 77-minute. Call it a trick if you will, but you'll see it on the 77 minutes. One of our favorite. Many VIP really laser into the 77-minute as an alternative if you're not getting clear answers on your other time frames. Just take a quick turn of the page through the 77-minute and take a look at what may be there. Now, in terms of that specific 200 weekly moving average, pay attention to it. Okay, the 200 weekly moving average is going to be a dividing line in the sand to an extent here. And I will tell you, we have pushed along the 200 weekly. We have grinded, guys, the traders grinded along here for a while precedingly. And what is the story with the 200 weekly? What is it? Let me take off some of these, experimenting with a new, guys, we're building a new code based on an advanced filtration and breakout, or like we call blackjack. So that's in the process. You'll see some codes floating around. Don't take the codes or the signals at face value yet. It's in an experimental prototype phase. So what I'll say is that 200 weekly moving average is going to be something that once it is cut loose from the 200, traders are going to own it. They're going to own a position directionally on it. And the ones who don't own a position directionally on it are going to look back at it and say, God, I tried to get a directional position coming, guys, long off of it or short off of it. And traders will look back at it and say, man, and I fought that thing for like 3 or 4 days, or guys, don't make it 3 or 4 hours. If it's 3 or 4 weeks, what's happening? You're consolidating along the specific 200 weekly moving average. Hey guys, if you're consolidating for a number of days, or consolidating for a number of weeks, or continuing to challenge a level like the 200, it's going to encourage you to think about the dynamics in play with even the squeeze of your guys, your Bollinger Bands, every ounce of consolidation or compression that can lead to, from the basic standards of New York Institute of Finance, things will compress, consolidate, and then they'll move. And then they'll compress, they'll consolidate, and then they'll move. If you guys have taken any of those courses, you know that's just aside from a squeeze, a Bollinger Band. That is the notion that's in play in the market. So I just want to encourage you, stay focused on this line, right? And don't let the market tire you out on this line as you look at being long over and short under. Okay, and you've had trades here. You've had an opportunity, one, without a doubt. You've had an opportunity, one, opportunity two, to trade this and hold on to a short to the downside, okay? What I will say is, don't let this level tire you out. One way that you cannot let it tire you out is to try and have accompanying trades along with a carry position. Pay attention, along with a carry position where you're going to be long over and short under. You can play for some rebound trades, okay? You can play it as support and resistance. So in addition to those, guys, to those carry trades that you want, if and when the departure occurs, and when it occurs, okay, I would just encourage you to look at what's going to be required for you to be able to trade in terms of a level of resistance or support that it is offering, resistance, right? But also be able to capture that dynamic of being bullish over and bearish under, okay? So I'm gonna encourage you today, and I think that's a real good final note. We talked about the breakout levels for Tesla, the breakout level for NVIDIA, a little bit lackluster, and I wanna confirm on Tesla. Let's take a look at Tesla that we don't have no, we don't have it, guys. We do not have it. So NVIDIA is sitting kind of on the, NVIDIA is like, who invited that? We're all like, who invited that guy to the party? NVIDIA. I'll tell you why. Because looking at the framework here, nice channel to the upside. Now that's a 1, 2, 3, 4, 5 Elliott wave formation on the 4 hourly, right? But why would I say that about NVIDIA? Because, I mean, guys, that is the party this year. NVIDIA, AI stocks, the Mag 7, you guys know that. And Bitcoin always. Bitcoin fits within the tech sector. We know this. But looking at this framework, if we're looking for a specific breakout up and over, right, up and over this specific line on just setting a candle up and over the 260, just call it 261 on Tesla, it does not have the accompanying complication that we can see clearly on NVIDIA. That's why I say it's like, who invited this guy to the party? Hold on, who invited this guy to the party? He wants us to trade a breakout up and over on NVIDIA. He wants us to trade a breakout up and over with a bearish, I don't know, who invited this guy to the party? The bottom line, that's how we start to feel. Yes, it's a coverture and handle. Yes, it's an inverse head and shoulders, a nice one, right? But as you look at the specific bearishly designed breakouts to the upside, traders who know what's going on are like, who invited this guy to the party? I understand we have an inverse head and shoulder. I understand that we've got a nice level here to even say we're kind of pre or almost post breakout with just another need to clear this lateral pivot to the left, right? What I will say is it's just It is not our favorite way to trade, to go bullish up and over rising wedges of any sort. To the extent that we can scream above it, we will be looking for the specific apex as a target to the downside. Okay, it's just a function of it being a part of a calculated conclusion of the demand agreement, bulls on support, bears on resistance. So I will just reinforce that fact that NVIDIA has that complication. Yes, NVIDIA has the complication wherein Tesla does not per se have that complication. We will say that Tesla has a different complication. Tesla does have its own complication in having a very clear and clean cut 1, 2, 3, 4, 5. So we'll go ahead and give that to each of them in terms of both of them being at the party here, kind of being like, hold on, you both are kind of singing a different story the same way, right? In terms of a potential completion. Level of resistance would be nice to hit. This is a bull target on Tesla, note such. And let's take a look again at, so those are both key considerations as we look in tomorrow. And again, when we talk about complications, when we talk about a lack of agreement, whether it be in pattern, bull, bear, when we talk about momentum to stochastics, to RSI, to MACD, to anything, when we talk about differentials, understand that the value comes into play. When we don't have any differentials to discuss, when we're in a situation and everything is in agreement. And when those circumstances happen, you'll sit there and say, and I'll say, and you'll say, well, this could be one of the trades that we have one time a year. This could be a trade that we have once every 6 months, every 12 months. Pay attention to this trade. It happens, right? In between, you get good at finding those micro moves where everything is in alignment on your time frame with no big frustrations, etc. But not to complicate a situation or a circumstance. That's never the idea, but to really distinguish when we're having, when we have confirmation and when we don't. And it's okay when we don't, we still trade. The ultimate line here is going to be a level of resistance across the top here, and it's going to be in line with a nested expansion here, looking something like this. That's the pattern in play for me. It just is what it is. And we see a constriction. We see this frequently in the back. You all see this with a good degree of frequency. And I hope you're all doing well. Looking forward, guys, to a great trade week. Just the bottom line is the truth. We get excited about our trading, without a doubt. It's what we do. We appreciate the opportunity to trade. We appreciate you being a part of that dynamic with us. It means a lot. It's what we do. We enjoy it. So looking at the constriction, right? That specific target function here was in play. Pay attention. The recoup to this level on that specific descending wedge, when we target a wedge, this here is a welcome recovery attempt, but does not satisfy my target hit at my apex. I don't care what we do in this zone. If we do not break the level of resistance, we maintain an active target at that specific apex. Note such. Note to self. So this hit is, for the record, a specific target hit back at that apex. I discussed that with VIP, wanted to cover that just one more time with you. The specific re-hit on the failure, that divergence that we see, divergence of price line to pattern expectation, because this pattern is typically what? It's typically a green pattern. It's typically a bullish pattern. So when we see a price line divergence to pattern expectation, what do? We target the specific conclusion of, guys, the exact calculated conclusion of that apex of the demand agreement of bulls on support, bears on resistance. We will target that apex. Okay, this hit is not the apex hit. This is a nice recovery move into the body of the wedge, an attempt into the body of the wedge, which we see frequently, but still, we will maintain an active target until we break that level of resistance. Just note such as you look at your targeting. You'll notice it on lower time frames. You'll notice it on other, this and other assets. Continue to work your targets. Work your targets. Notice when, and with which accompanying patterns they're trading well, and you can count on a target hit. Notice which ones are not trading well. If there's an accompanying pattern, be like, well, these just don't work quite as well on a descending triangle. Something along those lines, you may start to notice some things like that on specific assets. So in line with the need to break through this top line resistance here, and it's not, it doesn't look great on the daily, though we refer to the daily frequently, don't we? In terms of the pattern dynamics, the daily is trying to just right now on Bitcoin, isn't it? trying to tell you we might have a bit of a bull flag in formation. It's not just me. That lines up very well in terms of the specific parallel carry down resistance to support. Yeah, it's there, right? We have a bit of an angle on that bottom side. We have a bit of an angle here on that top side. So we're going to take the daily, always looking at the daily, very, guys, much so in terms of a prominent time frame that's typically very reliable. With that said, we're going to jump to the 4 hourly, guys, 9 times out of 10 and say, okay, what's the 4 hourly say to accompany with the specific daily? The daily is a time frame that is really something that has become very dependable for us. You're going to pay attention to that if you trade a lot of Bitcoin. Just looking at a messy fallout, we have to agree this is a messy fallout. The differential between the 4 hourly, between the, if we go down to the 30-minute, guys, and this is, it couldn't get much messier because the 4 hourly, let's just say the daily looks like it could be throwing you a flag on Bitcoin. The specific, if we look at the 4 hourly, it's like, okay, well now we may be running into a specific, and now this would be the issue. Okay, now we're running into, and these love to expand on Bitcoin. A symmetrical triangulation on anything, on any asset will unimpress you at times as it continues to push in formation. Bitcoin particularly loves to play, guys, a little bit catchy over the resistance on breakouts, fake outs, busted patterns, and along support. So this is being contemplated in terms of this specific move on the 4 hourly. A bit of a dynamic that's not welcome in terms of a confirmation, because that's where we'd like to see our specific bull flag formed on a breakdown of said 4 hourly symmetrical triangulation. We like to see that pickup of the parallel carry down to this level. This is prime time. We love to see bull pennants fail and catch as flags. We just love to see that dynamic. When it plays, and that's a trade we love to get, guys. So looking at the micro again, we caught this move today. It was a nice move. Of course, we have order stacked to preceding level of flat top resistance. And what I'll say is, as we get into the lower time frames, be aware of a lack of confirmation in terms of the bullish framework that we're looking at on the daily, potentially with the flag in formation. In terms of the 4 hourly, it looks like it could be holding on to the formation along a support line, projection support line of a bull pennant. Just pay attention to the fly in the ointment, as they would say. Okay, the specific flat bottom support on your 15-minute and nearly on your 30-minute as you get into your lower time frames, and on your 5-minute. These are not bullish expressions typically, okay? As you were to look at a flat bottom support, these are areas where the just classic TA straight off the shelf of New York Institute of Finance, guys, the only real place to start your journey on TA, period. Ultimate authority in terms of starting, where to start in the market. They're just going to tell you flat bottom support is going to be indicative of the fact that sellers are in the market, able to push price down to that level, right, consistently. So we have that 5-minute, 15-minute, 30-minute differential with the 4 hourly, which looks like it could try and catch as a bull pennant, with that differential with the daily, which looks like, well, I suppose looking at the daily, we could be even into some sort of a flag parallel channel formation to the downside. Remember, on a flag, you need to move up, downward sloping channel. So aside from all of the lack of confirmation, number one thing to consider, the 200 weekly moving average, okay? Over bullish, under bearish. What can you do to catch some trades, okay, while you're executing such over and under? And look at the previous price action over the number of years, over and under on the 200 weekly. And after you've done so, you let me know if you think that's a good strategy. You just let me know if, after looking at it, its entire history, go Bitcoin index, type in Bitcoin index, okay? And you let me know if it's a great strategy to be over bullish, under bearish. And that is, that's Scotland. I got my, I don't have a light on in here and I have my shades on, so I'm gonna put Scotland. What's up, Scotland? That's you who said that in the chats. What's up, brother? Hope you're doing well, Leon. Nice to see you. Hold on one second. There we go. Boom. There we go. Leon, bam, in the chats. So do your back testing on Bitcoin index. Take a look at we can look at it real quick if you guys want to. Let's see if I can just type this in, Bitcoin index. Taking a look at Bitcoin all-time history index. Look at this, it's index and it shows there for TradingView. That's your all-time history. Now the 200 weekly moving average, yeah, is one that you want it to be long over, with the understanding that there was quite a grind here in specific time periods. But yeah, you would be just crazy to not look at this line, guys, and say that's one you want to be long over. And I'm going to go ahead and say short under, okay, because there is some volatility in here to catch, to the extent that that line is prominently featured throughout the history of Bitcoin. Guys, it has paid to be long over. Hello, it has. I mean, come on, guys. This is the line. You can look at whatever line you want. This is the line. We've known this for a long time on Bitcoin, so the fact that we're riding on it, it'll allow you to trade a little bit more if you're short under and if you're long over, okay? So long over is the name of the game, but within that dynamic, and make sure that's Bitcoin index, the one issued there by and maintained by TradingView. That'll give you the entire history in the 200 weekly moving average. You got it. So, and in addition to the long over, the guys, the short under, get some ricochet trades in, get some swing trades in there, just like we did today. And it doesn't have to be well right from the line. You know, we're going to hit it, we're going to short it, and guys, you're going to establish a potential carry position and a potential more of a swing trade position. What I'll say is, as we get micro patterning in play here, you're going to be able to, like we did today, catch some different trades, and it's going to be a little bit more comfortable than potentially executing both, say a longer and shorter frequency trade along the 200 if you're not accustomed to that yet. Work into that, execute, work on your execution, do your practice rounds, get it together. In terms of pushing the right buttons, you have to understand so much of trading is learning which buttons to push. You'll talk to someone who doesn't know what to do or how to trade. They don't know the program. They don't know, I mean, they could understand a hedge. They just don't understand which buttons they're supposed to push. You know, it's a big problem in trading. You guys don't have that problem. You've executed a lot of trades, and I know you're proficient in that regard. I'm just going to re-encourage you along that specific 200 weekly. Let's do it. Now, you're going to say, well, that's fine, but I'm short under. Great. So I got paid here, and then we rebounded. We did. We even discussed closing it, didn't we? We just did. For some reason, guys, right there, it was one of those issues, and it was just like, yeah, and you're going to take some profits and lock those profits in right here, right? Because you did. You got paid, and it was like, it might be an okay place for us to rebound to the upside. In the instance that we came into contact with, here it was, preceding flat top resistance, and we did that twice. So you've had that flat top resistance twice as a just a range identifier in terms of that low for the bears to release and the bulls to engage, right? So what I'll say is these patterns, guys, they're not going to be 100%. You know that, but we're going to focus on the ones that give us that max probability. It's a pleasure to stream with you. Way to go today in equities. Boom. That's the way you, yeah, guys, that's the way you hold tight in the market. Yeah, way to go. Nicely done. Do remind yourselves that in terms of NVDA, we have a bit of that rising wedge. Just noted, okay? It can be a little catchy on the way up and over. It can be, right? We'll look for those levels of engagement, those tactical, guys, the tactical levels, be the cap line or the 20 moving average or the bands, top side, low side bands. Well, we're gonna be looking at that tomorrow. I'm excited about the open tomorrow. These opens are nice, aren't they? If you just start to catch the quick trades out of the starting gate, guys, man, that's the whole. That's the whole. I mean, that's the whole enchilada for a lot of guys and girls who trade. The ones who can, they get excited about consistency on the open. It's not the, well, I got 8 hours. I got to sit here for 8 hours. You're gonna sit there and you're gonna trade, right? You know, you're gonna sit there and you're gonna trade. You're gonna watch your other patterns develop. You're gonna enjoy the market. But man, when you learn to hit into the market, and she's producing, the market's producing for you quickly, and you got the right levels, and you're able to execute quickly, there's nothing better, guys. It's very, very nice. So I look forward to you developing that proficiency. That's exciting for me to see you all developing that skill set. That's just, we'll put a signature on that one. That's VIP, all right? We'll talk to you guys soon. Thanks for scheduling in, and way to rebound on Tesla. Nicely done. Way to not give up. We'll be around for the open tomorrow. Remember, never overexpose at any higher price, okay? And I'm going to encourage you, eat well, sleep well, and take care of those relationships outside the market, okay? That you took care of and you knew were important before the market. Now that you're in the market, take care of these relationships. We'll talk to you guys later. Take care. This is London with Bitcoin Spike and VIP Trader.